Welcome back to the Comstock channel. My name is Brian Hendrickson. It's midweek, so that means we have Joe Camp with us. Welcome.
Yeah, good afternoon. Middle of the week already here.
So it's in the middle of a week for a busy week on Friday. That's kind of what this episode is going to kind of be centered around. Let's start with CONAB.
So everybody looking ahead to Friday, there was some influence this morning and throughout today's trade from these CONAB estimates. CONAB is the Brazilian crop agency like our USDA, and they give us a preview about what to expect here coming into this next few days and leading into the crop report here coming up. We had CONAB revise their production estimates for corn and soybeans. For soybeans, it was a little bit negative. They went quite a bit lower than last month, but still they came in near the top end of where most private estimates are at. They called the Brazilian soybean crop 155.3 million tons. That would be sharply lower than where the USDA was at last month at 161 million tons, but it's something that would still represent a record large soybean crop. So for all that we've been talking about dry weather in Brazil, it's definitely going to curb yield, but not unexpectedly, they've still got strong potential there, in part because, as we knew, they were planting a lot of extra acres to soybeans here this season, and so it all adds up. Now, I think we can still move even lower, but CONAB, the USDA, similarly, they're not going to go wholesale and making adjustments until we get this harvest further wrapped up. And so we're going to see a reduction here come Friday. The question, as always, is just by how much. The more supportive number this morning, and it may be in part reason why the corn futures held up relatively better than the beans, is because CONAB came in with a corn crop estimate of 117.6 million metric tons, and that compares to where the USDA was last at 129. So that's a big gap there. You know, like soybeans, even more particularly for corn, because that second crop, for the most part, hasn't even, been planted yet. We're getting close to that, but not there in a big way. There's still a lot of time. And so the USDA won't do this all at once, but it is a preview of how this drought is going to undoubtedly affect not just the soybean crop, but eventually that second Safrina crop of corn, because for one, it's going to be delayed. We knew that the drought delayed the initial soybean plantings. Now we're even talking about some of these recent rainfall totals maybe being a disruption to the soybean harvest, and eventually another delay on top of already the late window for this Safrina corn crop. And so that leaves a big question on what to expect Friday, starting out with these South American numbers. We got a little preview of that here this morning from CONAB.
So it sounds like Brazil crop is going to be lower on Friday, but what about Argentina?
Could be the opposite for Argentina. In fact, that's the consensus guess here going into Friday's report, is that we're going to have larger corn and soybean estimates for Argentina because weather down there relatively much more favorable than what we've observed in Brazil so far this season. And we talked about CONAB. Another respected source from Argentina would be the Buenos Aires Grains Exchange. They came out recently with some estimates looking for the Argentine soy crop at 50 million metric tons. That would be larger than the USDA's last estimate of 48 million tons on the last report. We have Argentine corn pegged by the exchange at 56 million tons. That's also a million tons higher than where our government analysts were on that crop last. And if you look at these numbers compared to a year ago, it's really something. I mean, 50 million metric tons of soybeans would be exactly double what they produced last year. Corn at 56 million tons would be compared to 34 million tons last year. And that's because of last year, that huge drought in Argentina really putting a ding on their crops. Well, much better prospects so far here this year. And that's something we're going to have to deal with. Again, that Brazil's crops are going lower, but Argentina may be the other direction here to potentially or partially offset some of that bullishness related to the South American outlook.
So South America estimates are definitely going to be a key role in some of these numbers that we see on Friday, correct?
Yep, but they won't be the only focus. And this January crop report's so huge because of it not being just one crop report, really, but a handful of really key updates, including a possible revision to last year's U.S. corn and soybean yield estimates. We see the table of estimates pre-report the average guess for both corn and soybeans being either even or just slightly lower than where we were last month. We've seen some sources that would put it maybe a tenth of a bushel or two below last season, but we can see with these average guesses of 174.9 and 49.9, we aren't looking for them to budge much, but that does pose some risk if, for example, they were to come in at these higher ends of the ranges up to 176 and a half or 50 and a half bushels per acre for corn and soybeans. That would be a bearish surprise. Now, if we had a reduction to these corn yield or soybean yield estimates, of course, that could be a friendly development here. Same thing for acreage. The trade not looking for those harvested acreage estimates to budge much, but it is possible on this report, which is why we've got such a wild card type of day coming up on Friday. Now, these yield estimates are going to potentially affect what we see out of the quarterly grain stocks update. That's another report that comes out on Friday. If it was bigger or smaller, this crop from last year, that could impact, of course, what's left over. And that's what we're looking at here in the ending stocks estimates. It's going to be really an important number here because it's not only supply, yield, and acreage that can affect these ending stocks, but of course, usage or demand over this last quarter. And there's so many moving parts, even here lately, some rumblings about maybe we've used a lot more bushels of soybeans than had been anticipated all of a sudden because there's a mismatch between the USDA inspections data and the actual exports as calculated by the Census Bureau. We've had pretty good ethanol usage here. Maybe that could take away more corn than had been anticipated here up until these last few weeks. And we did have a strong ethanol production number here released today. So the ending stocks report, another big component. Ultimately, if you think about the crop production annual report that we get where yield and acreage could change, that influencing the ending stocks along with demand, those moving parts will show up eventually in the WASDE report, World Agricultural Supply and Demand Estimates. Those will have something to say about ending stocks. We show a table on expectations there. The average trade guess is seeing corn and soybean ending stocks down just slightly, but we can see the range of estimates from 1.977 billion bushels for corn up to 2.22 billion. That's a big deviation. So it leaves room for surprise. If you're talking about either below 2 million bushels, that's really bullish, I believe, in the outcome or reaction after Friday. If it's still 2.2 or higher, we're still, slugging kind of negative here in terms of being comfortably stocked on corn. Now, soybeans, same storyline. If you get above 300 million bushels, we're not necessarily comfortable, but we're certainly less tight than we would be if we're honing in on where the average trade guess is looking for, or certainly the lowest end of estimates down near 200 million bushels. So many moving parts here. I've mentioned 3 reports already. You've got the crop production update. You've got the WASDE report like we get every month where we can also incorporate those changes for the South American numbers. You've got the quarterly grain stocks update, and then another report, the winter wheat seedings report. I mean, this is one we only get once a year at this time. We'll have an update later in the late spring, but you've got these huge ranges of estimates. This is where we could really see some fireworks because of just how unknown the trade is on what to look for. And last year we had a huge bearish shock on this report. Well, I mean, we're kind of setting ourselves up for that again. If you look at the lowest trade estimate at 35.5 million acres, if you look at the highest estimate at almost 39.5 million acres, a 5 million acre swing on where we could be bullish or bearish. We're right in the middle in terms of actually nearer to the lower end. So I guess the highest trade estimate is certainly an outlier. But again, taking a page from last year, it's not out of the question that we could have a bearish shock on this report. But the average trade guess calling in for about 1 million acres less on all winter wheat plantings for this season. Again, 4 huge reports coming on Friday. This is really going to be a potential for fireworks, as it always is on this January update.
So as we wrap up, my final question is, what happens after all of these reports kind of come out? What are we looking at?
This is a huge potential pivot point for the market. And I say that because the trend has been lower here for a long time now, all of a sudden, and particularly more bearish over the past several weeks, all of a sudden gripping in a big way, the biggest way, soybeans. And we show where hedge funds are positioned in the soybean market, having erased a net long that had been held for nearly all year. There was one time this year, about 2.5 months ago in October, when hedge funds turned net short for soybeans, but it was only for a week. It was only by less than 10,000 contracts. And here we're back net short, probably now over 20,000 contracts. So they're decidedly bearish here all of a sudden. And that representing as bearish as they've been for over 3 years on the oilseed. So this report is either going to make or break their recent decision to turn bearish. It's going to say, all right, let's keep selling and amass a big bearish bet here going forward, or let's take profit on these recent shorts and turn the other direction. Same for the other grains, corn and wheat, where it's a decision that could be flipped, especially when you get into this time of the year. This could be a report that clears the way for seasonal upside. You talked to Dan Montronac yesterday about the seasonality of this market, and it was notable, and it always is, that normally we come to expect risk premium to enter into the market in such a way that lifts the grain futures higher into the months of spring, or into highs that could normally come in May, June, or potentially early July. This is going to be something that allows them to feel comfortable shifting more bullish, or certainly less bearish, heading into that more friendly seasonal in the months ahead, or it's going to just simply reinforce their bearishness. And I know that sounds obvious, but I bring it up because it is an inflection point potentially for this market that because we've been down so hard coming in, there's a good chance in my mind that if the USDA comes in, and as long as there's not some big bearish surprise, and I think that would be on yield in particular, as long as that those yield estimates aren't jacked up considerably, I think what we have a recipe for is a reminder, particularly on soybeans, that stocks are tight from that quarterly stocks report. Also, a reminder that the corn is not quite as comfortable as we had thought, and then there'll be also another indication of this corn being mostly in the farmer's hands, and right now tight hands, unwilling to sell at these relatively depressed values in such a way where we do trigger some of that sentiment shift for hedge funds into a more bullish rest of the winter. But it all rides really on this crop report coming up. It leads us back into thinking about what's going on down in South America and how that'll eventually influence export demand back into our own market. But with so many moving parts here, this is going to be a key day coming up just in about a day and a half here.
All right, a busy Friday. That'll do it for this episode. Have a good week.
Thanks. We'll finish out this week and see you next week to recap.
You can find us on Facebook, YouTube, and TikTok.